Hi guys, it's me again. This time I would like to talk about a trade which I took last week, and it managed to achieve 13 to 1 risk to reward ratio. But then, even then, you can sometimes get a zero profit out of the trade. So, as you have probably seen, I don't really like to talk only about the winning trades. It's just very easy to record a video about a double digit returning trade, which I've done plenty of. But sometimes you're actually learning a lot more, and so not sometimes, almost every time you're learning a lot more when you're discovering a trade which didn't really go according to plan, which was the case here. We have plenty of those trades as well. I don't want you to have the impression that all of our trades are double digit returning trades. This is literally not possible. As I've been saying previously, we have excuse me, anywhere from 2 to 6 trades a month on average, which are double digit returning trades. The other trades, they're anywhere in between. They could be from very small losses, break even trades, very small to somehow medium profits. And then we have around 2 to 6 double digit returning trades per month. This month we are already having we already had 3 double digit returning trades, and this was supposed to be the fourth one, but as you see, it actually didn't really translate into profits, or at least not big profits. It was a micro profitable trade, and what happened was, basically, I'll show you the very beginning of this trade. So this is where I took the trade. It was the morning session here in London. It was a Dow Jones trade, so I initially took profits at 1 to 1 risk to reward ratio. Then the price retested my entry one more time. Our entries usually are outside of the zones that I'm sharing with my students in the morning. So this was our zone, which is something like a supply zone, very similar to a supply zone. We use slightly different rules, but it's very similar to a supply zone. And then usually the best places to take a trade are somewhere outside of the zone. And this is what happened. The price went out. We took the trade. The price retested this level, then went down. Everything was looking literally like a textbook scenario, and then the price started going lower. And just after the US Open, we've achieved 1 to 11, and then later on 1 to 13 risk to reward ratio, which was looking great. And at this point, I just decided to let the trade run. And it was only next morning when I saw the trade retracing a little bit. So we were having around 1 to 4, 1 to 5 at this point, which was literally a very, very regular trade. So for me, it was a matter of either banking out big time, or achieving very high risk to reward ratio on this trade, or letting the price reach my stop loss. And in this case, you need to remember that when I'm in a place like that, I'm already running a risk-free trade. So for me, psychologically, it's a lot easier to perceive not making money on a trade, because I won't lose money on the trade as well. So I'm completely psychologically detached, and this is one of the best feelings when you're trading, to be in a risk-free trade, and to just literally let the market decides which way the price will go. This is the feature that my students as well love most of it, and it allows them to very emotionally to be very emotionally detached, and also to be psychologically detached, to be very objective when it comes to running a trade for some time. So this is where we took our trade. This was literally the high of the day, and the price went down. Then it retested these highs, and then went down again. And very early into taking the trade, I think it was a couple of minutes. Usually it takes 1 to 3 minutes. I was in a risk-free trade, and after these moments, you're literally not thinking about the trade any longer. So this is the 1 minute chart, so you can see that's where I took the trade. This is where I took partial profits and entered in a risk-free mode, and from there the price was just falling lower and lower and lower. So it doesn't, the way I'm looking at the markets, it doesn't really matter if I'm in a highly profitable trade, in somehow profitable trade. The only thing that matters for me is to be able to spot those low risk trading opportunities, to enter in a trade, to get in a free mode, and then a risk-free mode, sorry, and then from there let the market decide. Because I'm a strong believer of the inefficient market hypothesis. For a lot of you, that's not anything new. I don't really believe that anyone can predict where the markets will go. The only thing is you can basically position yourself in very short periods of time in a low risk trading opportunity, and then try to get in a risk-free mode, and then basically let the market decide. So if I need to illustrate that, this will be stage number one: find a low risk trading opportunity. Then stage number two would be entering a risk-free trades. Then stage number three would be let the market decide if this would be a double-digit trade. So those are the three steps, but it's essential that all of those steps are done in this way, of course, and not the other way around. And then it's essential that you have a very rigorous way, a time-proven, if you wish, way of entering in risk-free trades, because for a lot of traders it looks easy, but then even people who are entering our day trading program, the rules are very simple, but this could be very misleading, because when you're learning something, it usually takes a bit of time. With our strategy, it takes about 2 hours to learn the strategy, and maybe 1 month to fully grasp how to and where to find those zones, because this is one of the most important things. Basically, once you find those zones, it's almost like you're holding gold on your hands, since then it's very easy to spot our setups. What actually is quite hard is to find the zones. That's why I'm still drawing, as you can see, before the market open, I'm drawing the zones. That's the first thing I do in the morning, and then from there I decide if I'm going to take a trade or not. I'm doing this for the novice traders that have joined the program in the past week or so, since again it might be confusing for a lot of traders to realign the way they're seeing the markets, and to realign the way they're drawing those zones as well, because this is for most traders completely new information. Even though a lot of the traders, they used to to trade with supply and demand zones, to use support and resistance, but as you know, every trader, even if you teach them the same system, they'll be somehow making their own little tweaks and then using the system in a slightly different way. So for me, the most important thing is to draw the zones right. From there, it's easy to spot the patterns and enter in trades. The second most important thing is to enter in a risk-free mode, which our risk management system helps us to achieve that in the first 1 to 3 minutes. And then the next very important thing is to know how to let the market take your position. We are using timestamps in order to help us to achieve the maturity, or to reach the maturity of each trade, because sometimes, which one of the most common mistakes traders are making, is that they're letting a trade run, they're achieving 1 to 3 or even 1 to 5 risk to reward ratio, they're closing the trade. This is the so-called confirmation bias, or thinking in limiting terms, which we are trying to completely eliminate by following the timestamps concept, and this actually helps us to achieve very high risk to reward ratios on some of our trades. So I think I'm going to wrap up here, guys. We are actually, I just wanted to show you one last thing. We've taken a trade this morning, which currently is a 1 to 7 risk to reward ratio trade. I have no assumption, I have no expectations, so I'm not making any assumptions. This trade could very easily go back and hit my stop loss, or it could also very easily continue the downtrends, or stammer here for a little bit and then continue going lower, or hit the stop loss later. So you should not be making any assumptions. This is one of the most crucial things when it comes to day trading, swing trading, or any other types of trading. And you need to let the market decide if this would be a break-even trade or a profitable trade. So I'll see you in the next video, guys. I hope those videos are educational somehow for you. And if you have any questions, suggestions, or comments, just use the comment section below. Please do subscribe, because when you subscribe, this basically helps other traders like you to find this content. It's purely educational, so I hope that it can contribute to other traders who are looking for, the holy grail of trading, which there is none such. There is literally risk management and a good way to find low risk trading opportunities. Those two things, when combined, they can give very powerful outcomes. But anyways, enough about myself and the strategy. If you have any questions, please let me know. I would like to be helpful, and yeah, I'll see you in the next video, guys. Bye.